The retail investor remains bullish into 2015, according to the IMX. But let's take a look at the 5-year chart and what it represents relative to the S&P, because these are great clues in terms of how the home gamer is trading.
Yeah, and I think what it shows, Jill, is, again, you and I have talked about it before,
right,
that the retail investor is smarter than given credit for, and particularly those who engage with the market on a monthly basis, et cetera, at least reviewing their positions, maybe adjusting their positions, as to somebody who just set it, forget it, and
right,
doesn't engage at all.
So for 2014, what were the most widely held sectors and the top 5 stocks?
Well, the most widely held sectors are tech, financial, and some of the top stocks, Bank of America, Microsoft, Facebook, GE, many of the stocks that you would expect. Facebook was a little bit of a surprise to me, and I think it really shows how social media has really permeated everyone's day-to-day life. If you'd have said to anyone 5 years ago that a social media stock would be one of the top held by retail investors, they tell you were crazy.
Well, I think it's interesting, the mix. You have your dividend payer like a GE, you have your Bank of America, which financials were pretty hot for 2014, and then you have your internet names, your Facebook, Apple, which is consumer and tech at this point.
Apple was number 1. I should have actually mentioned that.
But it was a little bit different in December for the IMX because it turned positive. Q4 was definitely different than what we saw in 2013.
It absolutely was. And, the November to December reading was fairly similar, up a little bit of a tick into December. Overall, though, for Q4, it was a positive number. But with all that being said, I think it's very interesting that if you look at the names that our clients sold, they sold a lot of names that were up near 52-week highs. You and I just talked about Bank of America. It's widely held, yet it was a big sale for our clients. Facebook was a big sale for our clients. Walgreens, Target. You look at the names they sold, and it's really interesting that if you talk about how the retail trader acts, acting more like professionals, when things get up near highs, why not take some profits? And I think that's what we saw a lot of our clients do.
Well, this is an IMX/strategy question. Your clients are buying energy. They were all over the oil producers in December. What are your thoughts on that from a strategy perspective? Because we touched 49 this morning.
Right, and I think it goes to human nature, to be very honest with you, Jill. There's something about all of us, we like to catch that falling knife.
Right.
I guess one of the things is you could say it was a synthetic way rather than going out and buying oil itself, where you really would have gotten smacked. Probably not a good choice for people to go out and do so, and I hope they did so. Again, there are options, et cetera, in here. I hope they did so in a risk-defined fashion, even if they bought stock, that they put in a stop order below it so that they understood what the risk was beforehand, and we've seen our clients do more and more of that. With that, I do think people like to be the one that bought the bottom. You and I know long-term that's not necessarily a great choice.
Right.
So you also hope that it was a very small portion of their portfolio. They went in to try and do so. And again, I just think it's human nature.
And finally, your expectations for 2015. Volatility has to be coming back into the market. You have your interest rate decision that's going to have to be made, the stalemate in oil for sure. And now you're getting Congress involved with some pretty big economic decisions with the FOMC. So you've got to see some volatility in the market.
Well, I think volatility, that's the number one thing that's returning is volatility.
Right.
I think the interest rate influence is going to be even more interesting this year than it was last year. If we'd have talked the third week of December, we would have been talking about how everyone thought rates were going higher. We were heading into that FOMC meeting. Now here we are the first week of January, and it's like 10 years going to 2.0. It's really, really interesting to me that the interest rates have done the exact opposite for the last year and a half of whatever the consensus has been. So I think with that continuing to go on, that this is going to make for interesting trade. The other thing we didn't touch on was the fact that the euro is at 6-year lows versus the dollar. So that may affect earnings of some of these multinationals going forward. The price of crude falling could be it's great for the consumer. Best tax cut there ever has been. Should be very good for retail stocks, but the big multinational companies may be affected adversely. What I really think we're setting up for, Jill, is a great earnings season with higher volatility and a lot of fun trading.
Well, I'm sure the TD clients will certainly be looking at GE because that's your international conglomerate, your dividend payer, and it's performed well.
And it is, and I think that it's a widely held stock, as we know, not just from our clients, but in general. And the thing with GE is it's tough to name a business that they don't touch in one way or another. So it really is a nice synthetic way to look at the overall economy.
Okay, thanks, JJ. Always appreciate the insight. For The Street in New York, I'm Jill Malandrino.